What's up, guys? If you are a business owner, you're a sole prop LLC, and you're taxed as an S-corp, today we are going to be breaking down how to run one big old payroll at the end of the year. For a lot of business owners who are S-corps, a common strategy is to run payroll one time at the end of the year. So if you are going to pay yourself $60,000, well, you're just going to run that one time at the very end of the year. But how the heck do you actually do that? How is it done in practice? Well, today we're actually going to run you through the entire thing in a tutorial format. A little bit different episode today, but I promise you don't want to miss it. We're going to be breaking down how to do it, how to add your solo 401k to that payroll. And if you need to withhold additional taxes, we're going to walk through how to do that as well. I promise you, this is a good one today. Don't miss it. Welcome back, guys. Be sure to hit that like and subscribe button if you like today's content. And of course, if you need help with your own business and tax planning, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. All right, guys. So the first order of business when knocking this out is I'm going to assume that you're utilizing Gusto. Now, if you don't have Gusto, obviously that's not the end of the world. There's plenty of other payroll providers out there. But for today's tutorial, I'm going to walk you through doing this on Gusto just because that's what I use for my own business. That's what I refer clients to. I usually have our clients utilize Gusto just because I'm pretty familiar with that platform. It's pretty easy to use. But if you don't use Gusto, a lot of the payroll providers have a pretty similar setup. But again, this is a Gusto oriented tutorial. So the first thing that you're going to do is you're going to log in to your Gusto account. And on the left-hand side, you're going to click on pay. And in the drop down that appears, you are going to see it says run payroll. Okay, so you're going to see run payroll on the far left hand side. You're going to click on run payroll. And then once you do that, you're going to see towards the middle, it's going to say off cycle payroll, off cycle payroll. Now, again, I'm assuming that you haven't even run a payroll yet. The system is set up for you to pay yourself in a more traditional manner, like every 2 weeks, twice a month, every month, whatever it is. It's not really designed for you to pay yourself one lump sum salary, but it's easy to configure it that way. And how you do that is by clicking off cycle payroll. Now, once you click off cycle payroll, from here, you're going to select the period in which this is for. So you're going to go ahead and plug in 1/1/2024, and you're going to ideally have this go out to 12/31/2024. This one goes out to 08. It should be the entire year. So this is just a one-time pay stub for the entire year. Now, once you've plugged in the period, you're going to go ahead and just scroll down on that exact same page. And now you're going to see the earnings. Now, this is where in the gross earnings section, you're going to plug in the amount that you'd like your salary to be. Now, in this case, I plugged in $69,000 just because $69,000 is the, if you want to maximize your solo 401k, so max out the employee side, do a 25% employer match, and then on top of that, fill in the rest with mega backdoor Roth contributions, then $69,000 is the amount that you have to plug in for 2024. But this is obviously going to vary depending on your earnings. And of course, what is deemed a reasonable salary for you? A reasonable salary based off your profession and profits that your business is generating could be much higher than this. But again, just for keeping things simple here, I'm going to go ahead and plug in $69,000. The next thing that we need to be mindful of here is notice it says pay by direct deposit, pay by direct deposit. We don't want it to be pay by direct deposit. We actually want it to be pay by check. Okay. Now, why are we making that change to pay by check? Well, if we left it to pay by direct deposit, it's going to function just like any other payroll that you've probably done at a W-2 job in the past, right? So if you have a job and your employer is paying you a check and your check is $2,000 for that period, then you're going to get $2,000 minus all the taxes that you have to pay and everything else, and then you get the net amount. Well, that's functionally how the direct deposit would work here. You would need to have, in this case, $69,000 in a bank account somewhere, plus the taxes that you need to pay. And that would be moved over. The direct deposit portion would be moved over to your personal checking, and then the taxes would be pulled from your business checking. Now, a lot of business owners, they're thinking, well, I don't really need that direct deposit moved over to my personal checking account. I just want to pay the taxes and I just want to have this show that I paid myself, in this case, a $69,000 salary. If that's what you want, then this is what you want to do. You want to go ahead and hit pay by check. And if you hit pay by check, that direct deposit piece is not going to get moved over to your personal checking account. The only thing that's going to happen here is that taxes are going to get pulled from that business checking account. Now, once you have that selected, you're going to go on and move to the next page. And this is where it's going to give you kind of a breakdown of what is about to happen. Now, you're always going to see the withdrawal is going to be higher than the amount that you're going to pay yourself. And the reason for that is all the FICA taxes that you have to pay. Remember, FICA is 15.3%. Plus, you're likely going to have, state unemployment insurance and stuff like that you're on the hook for as well. So in this case, what I like to do is take a look at the tax breakdown. So you're going to click on tax breakdown. And when you click on tax breakdown, it is going to show you all the taxes that are being withheld from this particular payroll. So in this case, we have extra federal income tax being withheld, so $23,294. We have obviously our FICA being withheld. That's the employee and the employer side, plus the Medicare component, again, for that 15.3% total self-employment tax. And then, of course, we have California state income taxes being withheld in this particular case, and then disability insurance to the state that has to be paid as well. So quite a bit of taxes are going to be paid in this case. But the reason why you should look at this is, number one, it gives you an idea of what's going to get pulled out of your business checking account. And in addition to this, if you are someone who, let's say, is going to receive, let's say, a $200,000 K1 on top of this, right? Your salary is just one component of your income as an S-corp. You also have that K1 side. If your K1 is going to be much larger and you haven't done any tax withholding to account for that piece, either through tax withholding here or quarterly tax payments, well, this is your chance to go ahead and withhold more. I'll show you how to do that in a second. But if you are not withholding enough from either a Fed or state standpoint, you can go back and add additional withholding to make sure that you withhold enough. Okay. So assuming this looks good, all you're going to do is you're going to go ahead and hit submit payroll. You're going to submit the payroll. It's going to pull from the business account. You're going to have a pay stub that shows what your income was. And then, of course, you're going to get a W-2 that shows all of this information as well. Your gross salary, any 401k contributions, right? Stuff like that is going to get factored in as well. Now, speaking of 401k contributions, what if you have a solo 401k? If you have a solo 401k, it is best practice that the employee side of your contributions reflect on your W-2. Now, if they're going to be reflected on your W-2, you need to make sure that your payroll provider shows that you contributed to a 401k plan. Now, if you've set up a solo 401k for yourself, how the heck do you get that configured so that it shows on your pay stub and ultimately on your W-2? Well, what you're going to go ahead and do is you're going to go back to the dashboard, and on the left-hand side of Gusto, you are going to see something that says benefits. Okay, it's going to have a little heart symbol next to it, and it's going to say benefits. You're going to click on benefits. And once you click on benefits, you're going to scroll down a little bit, and you're going to look for financial health. Once you see financial health, you're going to go ahead and click on traditional or Roth 401k. Once you click on that, it's going to assume that you want to set up a 401k plan of some kind. In this case, you hopefully have already set up a solo 401k. If you have not set up a solo 401k, you haven't gone through the adoption agreement, haven't done any of that, be sure to check out some of our other videos and articles that we've written on how to get that set up. But assuming that you've set up your solo 401k and adoption agreement is in place, all that good stuff, then what you're going to go ahead and do is click add existing plan. Add existing plan. Once you hit add existing plan, it's going to assume that you want to link up an existing account at a place like Vestwell, Fidelity, Betterment, right? That's not what we want to do here. We want it to make it manual. And what I mean by that is we just simply want the W-2 to show that we're going to max out our solo 401k. That's all we want. And then on the back end, we'll go ahead and fund our solo 401k ourselves. So what we're going to do here is at the bottom, it's going to say continue to manage your 401k manually instead. You're going to go ahead and click on continue to manage your 401k manually instead. Once you click on that, it's now going to have you plug in the 401k information, and it's relatively straightforward. You're just going to put in the benefit name that's going to show up on the pay stub. In this case, you can just say 401k plan. Provider name, you can plug in the provider of the plan. For us, we hold our 401k plans at a firm called Altruist. Again, that is optional. You don't even have to plug that in there. And then, of course, you're going to plug in the 401k type. Most people are going to choose traditional. And then from there, what we didn't get a screenshot of is where you're going to plug in the deduction per pay period. Okay. Now, in this case, we're running one single pay period, right? There's one big annual pay period that's going to account for the entire year. So because that's the case, we're going to go ahead and plug in $23,000. That's the employee maximum that we can plug in. We're going to type that in there. It then is going to ask for if you want to put in an employer match. You don't have to do the employer match right here. Technically, the employer match, you can wait until the March 15th S-corp tax filing deadline to get that all squared away. So you don't have to do the employer match portion. You don't have to even do the mega backdoor Roth portion. You can leave that off on this piece. Now, once you knock that out and you go and run your payroll, when you run that payroll, you're going to see the tax breakdown. You're going to see the benefits breakdown. It should all be nice and clean and summarize what is effectively going to show on your W-2. And if you're trying to optimize your solo 401k plan, you're going to want to see $23,000. That's the employee max is being deducted from your gross income that you're paying yourself. Now, again, as I alluded to earlier, what about the tax piece, right? If you have not done any sort of quarterly tax payments, which I know a lot of you watching probably have not, if this is your only time that you're going to be doing withholding, which again, I know is a lot of business owners, the issue is that if you just run the default payroll, right, the default withholding, that is automatically put in place when Gusto runs your payroll. Oftentimes, not always, but oftentimes, that is not going to be enough taxes to cover your tax liability. And again, there's not necessarily anything wrong with owing a little bit at the end of the year. In fact, that's the optimal scenario, that you owe just a little bit at the end of the year. But we don't want to egregiously under withhold and start to incur under withholding penalties. So in order to avoid under withholding penalties, you can either do quarterly tax payments, which if you're doing this at the end of the year, you're probably too late. You probably missed the boat on that. Or you can just lump it all in your payroll at the end of the year. So you can choose to withhold all that extra tax on your payroll. And so what you're going to do if you want to do that, you're going to want to go back to the dashboard. On the left-hand side, you're going to click on team members. You should be able to see your profile yourself. You're going to click on yourself. When you click on yourself, you're going to see a tab that says taxes. And when you click on taxes, that's where you can elect to withhold extra on the federal level as well as the state level. So there you have it, guys. I know that can be a lot, but if you need help, by all means, reach out to us at www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We'd love to help you out with that. But this strategy here of running a one-time payroll is a very common strategy that a lot of solo business owners do. It works for a lot of people. A lot of people would rather do biweekly payroll and stuff like that in a more traditional format. But a lot of people like doing that one-time payroll in December. And if that's you, or if this is your first year trying it out, this breakdown that we did should give you a rough roadmap on how to do that. I hope you found today's episode helpful. Be sure to hit that like and subscribe button if you like today's content. Of course, reach out to us if you need one-on-one guidance. It's been a ton of fun, guys, and we'll see you next time.